As the new year begins, many analysts are becoming more hopeful about the prospects of Tesla's stock in the coming months. After facing some difficulties recently, the stock seems to be slowly but steadily moving upward. It's definitely worth keeping an eye on this trend as Tesla continues to be a major player in the electric vehicle market. And today, let's talk about what to expect for Tesla stock in the coming months and what analysts think about its growth this year. Recently, shares of electric vehicle manufacturers Tesla, Rivian, and Lucid Motors have significantly boosted, rising by 8.4%, 6.2%, and 6.2% respectively. This was likely due to a positive macroeconomic indicator that boosted all high-growth stocks. More specifically, an employment report came out on December 29th, which was good news for certain previously struggling high-growth companies. Additionally, both Tesla and Lucid had positive information specific to their companies. Tesla received positive news on December 29th and Lucid had successful funding round the previous week. Despite recent setbacks, Morgan Stanley analyst Adam Jonas remains optimistic about Tesla's future, and despite lowering his price target for the stock from $330 to $250 due to difficult macroeconomic conditions and rising interest rates, he believes that Tesla is well positioned to continue leading the way in the electric vehicle market. He notes that Tesla's status as a first mover in its ability to fund its own operations give it an advantage over new startups and established players transitioning to EVs. Jonas also believes that companies with firm financial footing, demonstrated scale, and cost-saving strategies across the value chain will succeed in this challenging environment. Jonas asserts that companies with strong fundamentals will continue to perform well, even in a challenging economic environment. Tesla CEO Elon Musk also sees the recent decline in the company's stock price as an opportunity. He has advised Tesla employees not to be too concerned about the stock market's fluctuations. In addition, he reminded them that as the company's performance continues to be excellent, the market will eventually take notice. Musk has a long-term vision for Tesla, and he believes that it will become the most valuable company in the world. While the future remains to be seen, it is true that for Tesla stock to rebound, investors need to remember and recognize the company's strong performance and a few other things. It's worth noting that the recent decline in Tesla stock is primarily driven by investors' reaction to CEO Elon Musk's acquisition of Twitter rather than company's performance. As the head of a culturally significant company, Musk's actions and choices are closely tied to the company's stock. In this case, investors are expressing disapproval of Musk's acquisition of Twitter, as it could be seen as a potential distraction from his responsibilities at Tesla. Additionally, investors have not responded positively to the negative attention Musk has brought upon himself through his use of Twitter. Nevertheless, Musk seems undeterred by the market's reaction and has no plan to sell the company. And as the new owner of Twitter and a disruption-minded leader, he will likely continue to shake things up. Furthermore, Musk has declared he will step down as CEO of Twitter once a replacement is found. Although he hasn't provided a specific timeline, the replacement will likely share similar political, social, and cultural views with him, as he has always been vocal in his beliefs. Another factor that has affected Tesla stock is the difficulty in securing components from Chinese suppliers due to the country's lockdowns and rising material costs. Beijing has implemented heavy-handed measures to contain the spread of the coronavirus, which has dramatically impacted production in other aspects of the company. Additionally, this has also affected the production and demand for Tesla's electric vehicles in China, where the company does about a quarter of its business. The cost of materials such as lithium used to make EV batteries and aluminum used to make the vehicle's chassis has also significantly increased over the past year, causing an increase in Tesla's cost of revenue. But there's some light at the end of the tunnel. China is gradually easing its lockdown measures, and most material prices, including lithium and aluminum, are beginning to fall, even if only slightly. According to S&P Global's market data, Lithium carbonate prices peaked in 2022 and are expected to hold steady at the lower prices through 2026 as supply catches up with demand. These headwinds will ease and the company is likely to see a recovery in due time. Ultimately, Tesla remains at the forefront of the rapidly growing electric vehicle market. Although more traditional car manufacturers such as Ford and General Motors are making inroads, new players like NIO and Rivian are emerging. And so, Tesla's dominance in the market has diminished in the past year. However, Tesla's top line is still expanding as the electric vehicle market grows. According to the International Energy Agency, electric vehicles are projected to account for a record-breaking 13% of global light vehicle sales in 2022, up from 9% in 2020. Furthermore, analysts at Precedence Research anticipate annualized growth of 23% in the EV market through 2030, and this is in line with predictions from other research firms like Beyond Market Insights and Deloitte. Additionally, Recurrent Auto, an automotive market analysis and retail software company, has forecast that the Tesla Model Y could be the best-selling vehicle of 2023. The Model Y has already achieved outstanding sales worldwide, especially in China, where it became the second most popular EV sold in November 2022. If Tesla can maintain this level of success, it could be a defining moment for the American automaker. Now, before we continue, I'd like to thank you for getting this far. And if you want to know what experts think is set for Tesla this year, then make sure to watch this next part. Despite falling short of analyst expectations, Tesla's Q4 2022 report still demonstrates impressive growth in both production and deliveries. The automaker reported a total of 1.31 million deliveries and 1.37 million total productions for the entire year, which marks a new record for the company. This significant increase in production and delivery numbers can be attributed to the company's expansion efforts in the form of starting production at 2 new factories, one in Austin, Texas, and one in Brandenburg, Germany. The company also ramped up production at its existing Fremont, California and Shanghai factories. Notably, Tesla does not disclose production and delivery numbers by region, so it is difficult to determine the exact impact of these new factories on their overall production numbers. However, it can be surmised that the addition of these new factories played a significant role in their ability to achieve these record-breaking numbers. It is also important to note that most of the deliveries from the company were from their entry-level Model 3 sedan and Model Y crossover, which amounted to 388,131. Meanwhile, the higher-end Model S sedan and Model X SUV delivers were only 17,147. This may indicate the company's focus on expanding its market share in the affordable electric vehicle segment. So, Tesla's Q4 2022 report highlights the company's continued growth and expansion despite falling short of analyst expectations. With the opening of 2 new factories and the ramping up of production and existing facilities, the automaker set new records in production and deliveries. With ongoing efforts to expand its market share, it will be interesting to see how Tesla's production and delivery numbers fare in the coming year. Many are curious about where Tesla will go next as the year progresses. The future looks bright for the automaker, and many look forward to the 2023 Investor Day, which will be held on March 1st. The event is set to be live-streamed from the Tesla Gigafactory in Texas. It will be open to some of the company's institutional and retail investors to attend in person. During the event, Tesla investors can see the most advanced production line and discuss long-term expansion plans, capital allocation, and other subjects with the company's leadership team. This is an excellent opportunity for investors to gain insight into the company's current operations and future plans. There is also an expectation for some positive news to be shared during the event, such as a possible stock buyback. Currently, many investors are optimistic about the future of Tesla, and their hope is that 2023 will bring even more success for the company and its stock. The current rise in stock prices in the market can be taken as an indication of this positive sentiment. The event will be a great chance to listen to the company leaders about their vision and objectives for the future. It will also be an excellent opportunity to see Tesla's most advanced production line and get an update on the company's performance and expectations. Investors should be excited about the meeting, where they can gain more information and insight into the company's performance and future plans. So, what do you think is in store for Tesla this year? Let me know what you think in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know more about Tesla's stock performance predictions, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.